Post Closing Occupancy Agreement, Rentback Agreement, Use and Occupancy Agreement. These are all different ways to describe an agreement that is important to have when there is a sale of a home, but the buyer does not get the keys at the closing and the seller continues to live in the home after they've sold it. You might be asking, why would this happen and why would a buyer agree to this? The seller may still be working on finding a new home, so they market their current home as for sale, but that the seller needs to live in the home for X amount of days after the closing. Then, once they have a buyer, they will be more confident to commit to buying another home. See, most people don't want two mortgages. And also, most people don't want to be homeless. So having the ability to live in a home after closing can offer the seller some peace of mind. A buyer may agree to this if they love the home and they are willing to do what it takes to get the seller to agree to their offer to purchase the home. In some cases, this means agreeing to allow the seller to live in the home after closing. Both parties will want to make sure that this agreement is fully understood and everything is in writing. Sometimes a purchase agreement may have a section that addresses seller occupancy after closing, but may be very brief and only cover the number of days and the cost of occupancy. Although these two things are very important, you may want to attach an occupancy addendum to the purchase agreement, which will cover even more factors regarding this proposed arrangement. If there is a mortgage involved, the lender will have to agree, and typically there will be a maximum number of days allowed for this occupancy. This occupancy agreement should outline the following: how many days will the seller be allowed to occupy the home after closing? How much will the seller pay to the buyer for this occupancy? This could be a lump sum or a cost per day. Monetary damages. What if the home is damaged during this occupancy? Will there be a damage deposit, and how much is it? Holdover penalty. What if the seller fails to give up the keys by the agreed upon date? The seller may be required to pay a higher rate as a penalty. Insurance. Who will be insuring what? An example scenario could be that the buyer maintains hazard insurance and the seller maintains insurance for liability and personal property. Access to the home. The buyer may want the ability to check in to see how things are going throughout this period. Utilities. The agreement should specify who is responsible for paying utilities related to the home. Maintenance. Who is responsible if the furnace stops working? How about a plumbing problem? This could be spelled out to avoid any misunderstanding if these problems should arise. You may want to include wording that this agreement is a use and occupancy agreement and not a lease. There are tenant-landlord relationship laws, so the buyer would want to avoid falling into this category if possible. A buyer may also want wording that the seller's liability is not limited to the amount that is being held in escrow. This is just an overview and is not meant to provide legal advice. Please contact a local real estate attorney to make sure you are covered if you choose to include this in your next home transaction. So who is holding this money we're talking about? The funds are usually held in an escrow account with the closing agent and will be distributed according to this signed agreement. If everything goes right, there will be a key exchange, and that's when the seller actually gives the keys to the buyer. If there is a mutual agreement as to how the funds should be distributed, then the closing agent will be notified and payments will be made out accordingly. If you like this video, please click the like button, and if you would like to be notified about more videos in the future, please subscribe to this channel. Also, feel free to comment or message me with any questions you may have. Thanks for watching. I hope this video gives you a better understanding of how a post-closing occupancy agreement can be a useful instrument in the home sale process.